Hello, everyone. Welcome to our This Week in Crypto stream. It is our last one of April here on the 29th, and it's been kind of a continued chop fest for us traders right now as we watch prices over the past week decline mostly across the board again. Some are arguing that this is just a further dip to buy, while others are saying this is just a continuation of a bear market that has essentially been going on since mid-November, back when we hit our all-time high and then quickly declined from it in terms of Bitcoin's price and Ethereum's price, as well as many other altcoins. As we can see here, there is pretty much a sea of red among the top 100 assets in crypto in terms of market cap. We do have a few exceptions, but overall, we are trying to figure out whether, this trend of price, getting our hopes up with prices followed by a big drop off, will eventually cease, and we start to see some consistent climbing, kind of like we did in March. But obviously, other than March, the months of December, January, February, and April have not been very kind to traders, and we've seen a lot of red like this for long stretches. So we'll be looking at on-chain and social metrics for Bitcoin, of course, like we always do, as well as try to take some of your pressing questions regarding some of your altcoins of interest out there. And of course, I will be remiss to say that we do not give investment advice on these calls. If this is your first time watching, our goal here is to always show divergences that are forming based on on-chain and social metrics, based on historical evidence of what typically happens to prices when we do see these types of divergences. So keep in mind that if you're waiting for us to make objective market calls, that's not what we do here. We simply are here to tell you whether charts are indicating historical bullishness, historical bearishness, or anything in between. That said, I'm here with Maxim on the call, the founder of Santiment, since it began back in 2016. Maxim, how are you? How are your perceptions of the markets right now?
Hi, Brian, and hi, everyone. Yeah, it's confusing one. Let's put it. I was just looking for the proper word, and I think the last time we discussed in our Discord with community, I said like 3 days ago, said now it really looks like for some time it was very confusing, and like you really give up understanding where it's going. And yeah, it hasn't changed much. The only thing which improved a little bit when I was looking purely at the price actions for some coins, I think we will cover it. Not so visible, by the way, in Bitcoin and Ethereum, but in some coins, it almost feels like it's sitting on some support and wants to break through, like wants to get down, wants to scare people away and really turn into negative. And then some story will emerge explaining why it's so bad. But we'll see when we go. Yeah, I will probably mention these few coins. Yeah. Because your market likes to move between extremes, or it goes to for some time of like confusion, where you got lost interest because like, gosh, I don't know what's going on here, so you want to give up. And it's and we easily forget after we get to excitement phase, but most of the time market is either boring or shocking and actually emotionally difficult to live with. But we have a reward part when it gets too exciting, everything's good. So we forget these difficult parts, but we are obviously the difficult part. And yeah, we'll have to decide either it's a prolonged correction, or we will experience one more push down and fear and really give up and say inflation, all prices, it's terrible. Yeah, but we will come up to this. Yeah.
Mm-hmm. Yeah, for many traders, the only thing worse than obviously, if you're a bull, of course, there are bears out there who enjoy prices dropping quickly. But the only thing worse for a bull, besides just a big drop off all at once, is kind of stagnant periods where you're bleeding slowly, and there's a lot of gradual chopping going on, slightly to the downside. And like Maxim said, it causes confusion and kind of impatience in the markets where there really isn't enough positive volatility out there to even take advantage of for a short-term gain, because it's like mostly just very small, death by 1,000 cuts kind of market conditions where you're just hanging on. You see just a little bit of optimism and then more downswings. And that's kind of what's been going on lately. There's not even a big dip to take advantage of. It's a lot of like, okay, Bitcoin's back down to 38K. Oh, wait, it's trickling up to 39. Nope, back to 38. Oh, wait, now it's actually going back up to 40. Nope, back to 38 again, right? And so there's been a lot of that going on the last couple of weeks. Bitcoin, of course, being down 4% now, sitting right around 39K. Ethereum sitting at 2864 or so. We do see a few altcoins out there, right? For the people who have a high tolerance for risk, trading something like Hex has worked out well. ApeCoin, of course, continues its decoupled status from the rest of the markets. The Metaverse coin out here, GMT, continues to do well too. So it's actually a lot of the same assets that have been climbing while the rest of the markets have been falling. We can see right at the end of this top 100 list, Lido, Kava, Kyber Network have also been doing well. I should also mention Nexo. But other than those projects, if you're looking at the top 100, you can see from our tree map here, it's just, whether the market cap is big or small, a lot of bleeding has been happening, but it hasn't been major bleeding. It's been kind of gradual slides, and especially altcoins, it's like 3, 4, 5% per day. Maybe a slight glimpse of something that looks optimistic, and then a further drop. But the good news is we have metrics to show when the bleeding roughly might end. I say might, and I know that isn't very helpful for some of you, but the further we're slipping here, the more these bullish divergences kind of open up. And we have seen some legitimate bullish divergences in our previous few This Week in Crypto calls. And we'll go over them today to try to identify, whether this chopping can finally conclude. And we see a little bit of an optimistic breakout. A lot of that, of course, is going to depend on the correlation with the S&P 500 and equities markets in general. And right now, there's still a very, very tight one. It looks as though the two markets have not given up on depending on one another. The next FOMC meeting is coming up in a couple of weeks, and many are anticipating a second 0.25% interest rate hike, which will cause the markets, it'll essentially cause companies to have a slightly harder time profiting, right? And that's why markets go down, because of the fact that interest rates are bulls' enemies. We don't want to see in the equities markets any obstacles making it harder for companies to thrive. So a lot of people are saying this is kind of similar to what happened in late February, early March, where prices were bleeding leading up to the first FOMC market, which was kind of a foregone conclusion that interest rates were going to rise. And then once they actually did, prices actually bounced very quickly for those next 2 or 3 weeks. And March ended up being a very good month for crypto, the only good month of the last 5 or so that we've had. So now we're looking in kind of a similar position with another rate hike announcement, likely, but not necessarily certain, at least from the news I've read. Some of you may know more than I do, but that is likely because of crypto kind of being stuck in that same pattern as the equities until this FOMC announcement happens. So it could very well be a fundamental event that finally allows crypto to breathe and move in its own directions without this over dependence on equities markets every step of the way. That's at least what I'm seeing right now. And we'll look at some Bitcoin charts right now to really gather a few updates on what's developed in the last week And we'll also look at some of the long-term divergences out there to see what this continued bleeding is doing to things like MVRV and things like that. It's pretty fascinating. I want to begin by showing how the ratio of on-chain transaction volume that is in profit versus in loss is doing for both Bitcoin and Ethereum. Bitcoin is here in blue and Ethereum is here in pink. This is a weekly look at the transactions in profit versus transactions in loss. So more of a zoomed out perspective for the past 6 months. And what we see by looking at this chart is mostly profit taking that occurred in that second half of March, as I mentioned, after the FOMC made their initial announcement that the rate hike was confirmed. Everything went up. Everyone was fearing it back here, even going back here to like the war announcement between Russia and Ukraine when prices dropped. We saw a lot of chopping basically for the 2 months prior to that FOMC announcement. And then we had the kind of a mini breakout here, followed by Ethereum seeing some major profit taking, Bitcoin taking some more modest profit taking. The beginning of April was interesting, where Bitcoin actually saw transactions happening at a loss more so than in a profit, which is generally a good sign, but prices declined anyways. Ethereum was still well in profit for a lot of traders who were trading after buying the dip back here or back here. And generally, we've been kind of flat ever since. It's interesting because Ethereum had a big week kind of last week where it made it back up to 3,000 or so. And it's now dropped off just a tad here. And traders are capitulating a little bit once again, while Bitcoin is right here around flat. But as long as the Ethereum side of things is showing a lot of capitulation, that may indicate that there's some relief coming up for at least Ethereum and some ERC20 altcoins. That's generally what I see when I see negative marks here for the ratio of on-chain transaction volume and profit to loss for Ethereum. But it's, of course, still only about halfway through the latest week here. And things can change today and going into the weekend. Overall, though, I think this is a better sign than usual, considering Bitcoin is now flat after being slightly in profit take mode the last couple of weeks, and Ethereum looks to be mildly bullish based on the amount of transactions happening in loss compared to usual. Now, moving over to our main Bitcoin charts, I'll give a quick update on utility here, as we always try to open up Bitcoin metrics looking at. And it's really not much to update on other than circulation perhaps dropping down just a bit this second half of April. You can see the 30-day trend line of the amount of unique Bitcoin moving from address to address. And it's mostly been a mild decline ever since around the 15th, maybe even going back to the 13th or so right here. We can also see that on our NVT chart, this is our 7th straight week of a semi-bullish divergence. So yes, we're seeing a slight decline here, but if you look at historically the last year, the amount of Bitcoin moving on the network is actually up compared to even back when we were seeing those early 2021 all-time highs, and in the October to November 2021 all-time highs. This was, of course, the true all-time high for Bitcoin, going a bit over 68K at that time. Circulation actually peaked a little bit better than where it was at its best. So yes, it may be flat for the majority of 2022, but because it stayed flat while prices have fallen massively since the all-time high, that's actually led to a bullish divergence because circulation and utility is staying relatively high while prices have dropped. Alternatively, when prices were rising a lot and circulation wasn't, like we saw from March all the way to September, we can see it sort of illustrated here. this is April through September or so on this chart. Notice how low this line was getting despite prices rising. That was why it was creating a bearish divergence at that time. And even here, as circulation was rising, the price was rising way, way faster, causing a bearish divergence to form. The amount of unique Bitcoin was not keeping up with market cap levels ballooning to where they were in late 2021. So it's kind of been a tale of two stories over the past year, where we went from inflating way too fast to having a big drop off, and then finally circulation caught up, and we are in a relatively healthy position for utility right now. Now, this is only one piece of one half of the utility puzzle. We can also look at the amount of addresses interacting on the Bitcoin network. And we see that it's also been relatively flat, perhaps not quite as great of a story as circulation is painting, considering if you look at this brown line over here, we were way up above 1.1 million daily active addresses interacting on the Bitcoin network per day back in April and May of last year. Had that big steep drop off, a bit of a rise around the all-time high, and it's been actually a very slow drop off ever since. So yes, there may be a steady amount of unique Bitcoin circulating on the network from day to day, but it's happening with less and less active addresses out there. So less addresses are the ones contributing to the unique Bitcoin moving around on the network. So we use these two metrics to really understand how much future price movement can, or how future price movement will look based on the current conditions of utility amongst traders. And right now, semi-bullish for the circulation looks good, but probably semi-bearish here neutralizes that and doesn't really create much as in terms of an optimistic outlook or a fearful outlook going forward. But we have a lot more that we can look through. And I think one of our most important metrics to really cover today is MVRV, particularly our 30-day time frame, which is a nice split between long-term and short-term traders and how they are performing in the markets. Generally, when average trading returns are quite high, that's when corrections occur, like we saw here. And when they're very low, that's when bottoms occur, like we saw there and there. Right now, we are in a semi-painful range for the average traders, as you would expect with so much slow bleeding happening over the past month. The average trading returns for trades that have occurred over the past 30 days sits at about negative 7.5% right now. That's just about halfway to the true opportunity zone that we've marked here. Anytime the MVRV 30-day gets below here, that is when there is almost always some sort of relief bounce that happens, at least temporarily. Alternatively, if it gets above this plus 15% threshold, that is almost always when a profit-taking opportunity arises and prices will at least correct for a short period of time until MVRV starts to neutralize again. So right now, considering we've been in negative territory for almost all of April, going back to April 5th, it's a better sign than usual that a bounce is a much more likely scenario than a further drop-off. This certainly doesn't mean that we can't continue to decline, especially because there's some meat on the bone for the MVRV to drop further on this 30-day time frame. But right now, if you were to open a position or add on to your current position for Bitcoin, it would be doing so at a less risky time than usual. Now, we also have this divergence model, which not only looks at Bitcoin, which is right here, but it looks at several of the top altcoins out there that we have MVRV data on. And we see that many of them are quite close to this dashed opportunity zone line, which is calculated by looking at historically bullish times for the 1-day, 7-day, 30-day, 90-day, 6-month, and 1-year divergence thresholds. And the closer those collectively are, the more you're going to see bars very close to this opportunity zone. Now, it can also get close to this danger zone, but you can see that none of these metrics or assets right now are in the negative territory, or I should say positive MVRV territory, which would lead them to look like a negative bar. So universally, we are in an opportunity zone right now, not quite in this huge threshold right here, other than a few like Phantom, and there are probably a few smaller cap ones that would be here that aren't showing on this chart. But generally, it's a pretty good sign that all of these are showing that trader pain is the theme that is sort of taking hold of the markets. And average trading returns being this low typically means that prices have a pretty good chance of bouncing. Now, this could mean a very short-term bounce. I think, to open the week on Monday and Tuesday, we saw MVRV divergences look very similar with a lot of bright green underbought signals. And we had like a Wednesday bounce, which caused most of them to actually go to semi-underbought. And as soon as they did, that's when we had a kind of continued decline, and everything returned right back to underbought like it is right now. So if the pattern continues, then today or potentially tomorrow, we can see at least another short-term bounce to start to neutralize some of these MVRVs. And then it's unclear whether we'll stop and stagnate again going into the weekend with less trading going on, of course, or this could be the beginning of a longer bounce. Of course, it hasn't even happened yet, but when it does, it could be a longer bounce. It'll all depend on whether crypto markets can start to break away from the S&P, as I mentioned at the beginning of the call. So we might continue to see a gradual chain, swap between underbought and semi-underbought until the FOMC announcement actually happens, or you can kind of play the long-term game and just buy and hold as this MVRV divergence model would dictate until the FOMC announcement happens, and then sort of play it by ear based on how on-chain and social metrics look then. So that's a little update on MVRV. Maxim, I'm curious, do you have any thoughts yourself on how this 30-day MVRV chart looks, or any other MVRVs you'd like to go over?
Yes. MVRV, especially the 30 days, it's always need to be patient if you want to use it. And you lay down very nicely danger and opportunity. You have to wait till it comes. Yeah. It will come eventually. No worries, as you will see. So don't expect it to. You cannot push it. It will just come one day. But then you can. Yeah, you should use it. And for many assets, it's like this. Need to be patient. MVRV is a good one, but sometimes you need to wait.
Yep. All right, very good. So let's check out a social metric here. I'm looking at our weighted sentiment chart, which indicates the amount of social volume that an asset is getting, and multiplies that by the ratio of positive versus negative comments to give us an idea of how euphoric or fearful the crowd is about a particular asset. In this case, we're looking at Bitcoin, and we're looking at weekly intervals. So each of these up and down bars represents a week of positive or negative sentiment by the crowd. We see that we went through a period between mid-March and early April where we were negative for about a full month. And during this time, we had that big mini rally here that I mentioned, followed by a drop-off. And once there was a drop-off, we suddenly saw the crowd turn positive because they felt that this was a dip to buy, and they could get in low. And it turns out, for now, there really hasn't been much dip to buy. In fact, prices have continued to decline while traders have stayed euphoric. And we actually saw last week, going up until the end, just a couple days ago, of this 7-day interval, this was the most positive the crowd had been since December 4th all the way to the 7th. So this was basically the largest spike in euphoria in 2022. And it came at an interesting time. There really wasn't any fundamental event to excite the crowd. There were just a few kind of micro positive days in crypto that started to excite the crowd. And when this happened, they felt that it was the perfect dip opportunity. But it was a bit too telegraphed, right? It seemed a bit too obvious. And as it often occurs in the crypto community, it becomes a self-fulfilling prophecy when everyone decides that this is that little dip to finally buy after we saw this encouraging uptick. It turns out it is not the dip to buy, because we need the crowd to be more negative and have a little more pain and doubt in the future of crypto in order for the true bounces to occur. We see right here, for example, back from mid-June to mid-July, there was a ton of negativity. This was after the big May drop-off, had a few encouraging signs, and then boom, another big drop-off. So it was looking pretty miserable here for a lot of traders who really hadn't seen a big correction in a long time up to that point. And you saw just how much FUD was happening. And at the conclusion of that FUD here in mid-July, we suddenly see this huge uptick to liquidate a lot of shorts that were happening. And we haven't seen a stretch of negativity that long ever since. Arguably, right here has been pretty similar. But this is kind of the extreme negative sentiment that we want to look for as a clear sign to buy. And right now, this isn't too promising a sign because the crowd still appears to be a little too optimistic. Not extremely optimistic. We're fairly neutral as of now in real time, but it's not an ideal setup on the social end as far as I see. Let's also take a look at the other important social metric, which would be dominance on Bitcoin. And right now, Bitcoin's dominance, the amount of discussion related to the #1 market cap asset versus the top 100, the dominance appears to be slipping a bit. And we did see a nice uptick back in mid-April where conversations were being had close to 20%. And after a little bit of chopping here, it appears that the focus is back on several altcoins, which is not an ideal sign when prices have declined for Bitcoin. We prefer to start seeing major conversations about Bitcoin since it's carrying the rest of the crypto markets. And when that's not happening, it means that traders are trying to precisely buy bottoms in many altcoins and SH coins out there that do not really have as much value in carrying the crypto markets the way Bitcoin does. And really, we want the fear and the front and center attention to be on Bitcoin in order to justify that some legitimate FUD is happening and we can have a big bounce like we're hoping to see. So as long as social dominance on Bitcoin is below 20%, there's always a bit of risk in being in an asset class where there's so much focus on altcoins and NFTs and projects unrelated to the top asset that makes prices churn. So keep in mind that this is not the best sign, and we'd rather be moving up in social dominance instead of where we are now. So on the social end, two not so great signs. But we have plenty of other on-chain things we can look at. The next thing I wanted to check out, supply and exchanges, I'll keep really brief, continued decline here. As long as that's the case, the long-term outlook in terms of future sell-offs is looking limited, which is a good thing. It means that there is less and less risk of massive Bitcoin chunks being sold on public markets that can cause prices to go down. Prices can still go down gradually, but you generally won't see as many big drop-offs as long as the supply on exchanges is moving south as it continues to do. Where is my funding rate? Let me check another template really quick. Custom metrics. Here we go. So let's look at just the last month in terms of the average exchange funding rate for Bitcoin. We can see that after a stretch of, this is the indecisiveness that Maxim and I are talking about. We're going from positive to negative to positive to negative to positive, and now we're back in negative funding rate territory, meaning there's a slight bias toward shorting the markets from traders right now rather than longing them. So traders are betting against the markets going up. And this is generally a good sign because similar to the social metrics out there, or I should say weighted sentiment specifically, when traders are putting their money where their mouth is and actually betting against Bitcoin going up, that tends to be when short liquidations occur, like we saw here in an extreme condition. These prices moving up as there were so many shorts going on meant that liquidations were happening and essentially they were acting as rocket fuel for prices to continue going up until traders capitulated and started going long again. And once they did start going long, that's when the price dip happened once again. And now we're back in negative range, which means there is a better chance of a price rise happening than a price fall. We can also look at our funding rate model here, which shows over the past 48 hours, a very short recent time frame, what's been going on hour by hour. And the Bitcoin line is here in blue. And essentially, it actually just updated the last hour here. Essentially, the last 3 hours, we've been back in short range after a long stretch yesterday where traders were mostly longing and betting in favor of prices moving up. And obviously them betting that prices would move up did not go according to plan, as it often is the case. Prices declined for most of that stretch. And what do you know, as soon as we see this trend to significantly short on exchanges, prices start to bounce again. So this is pretty typical. We saw kind of a similar effect even 2 days ago when it was mostly in green territory here and prices were declining. So all of these shorts were incorrect, and either they gave up on those shorts or they just straight up got liquidated, and rinse and repeat, right? The purple line here is the average altcoin funding rate. So it's measuring essentially the top 100 or so altcoins and what their short versus long ratio looks like on exchanges. And it's mostly been in the short range for altcoins, which is a good sign, considering almost all of the past 48 hours is in the short territory, means that traders really don't have a lot of faith in altcoins moving up right now. Perhaps many are more in Bitcoin than usual. According to social dominance, though, that may not be the case. But regardless, the confidence level toward altcoins is not very pristine right now. And Maxim, I'm curious on your take on the funding rate end. Have you seen anything interesting here? Are you putting a lot of precedent into what's going on with traders and where they're putting their money?
Well, I didn't read the talks or I didn't see much. But funding rate, yes, today earlier we checked it with some other team members and it was a bit too positive. Yeah, so we were basically going down for the last few days and it still was too positive for the current environment. Yeah, we need to wait.
I wonder if you were looking like right around here, right before it actually skewed negative, because right now it's actually the last 3 or so hours it's became negative again.
Maybe because we checked it 4 hours ago.
Yeah.
Possibly, yeah. Yeah, it looks like it's flipped to negative again, yeah.
So if you're a swing trader out there and you're watching this on a very short-term time scale, it just flipped into better conditions than it was just 4 to 24 hours ago when traders were confidently longing, and obviously it didn't go too well for them. So keep that in mind. I think funding rate is a top 5 metric that Santiment offers. So I would always try to keep close tabs on it. If you have your Sandbase Pro account and you have your API, you can download and make a copy of this model here and use it yourself with your own plugged in API and check in on it anytime you want. You can refresh just by going to the data tab and basically deleting this cell, clicking undo, and it'll do a manual refresh and bring everything up to speed. You can also look at individual funding rates and see that something like Axie Infinity, which always seems to have a slightly negative funding rate, Dent, looks like Waves, Scale, Small Love Potion. There are several altcoins here showing a slight short bias right now that you can try to take advantage of if you want to bet on the short term and bet long against many of the high ratio of shorts going on for many assets. Okay, let's move back to some other metrics and then we'll start to transition to altcoins. Oh, I posted about this earlier in the week. The divergence between the active addresses and price is starting to move up. We talked about active addresses at the beginning of the call and how there is a slight decline in them. However, prices are moving down faster than active addresses are moving down. Therefore, we're starting to see, at least in the past month, one of the higher levels of active address ratios versus the price. If I zoom out to like the last year to really give some context, we can see just how often things fluctuate up and down. But if you pay attention to the really high spikes here, that tends to be when the bounces occur. We saw one pretty precisely here in mid-January, right when things really got high. We saw, during this long stretch between May and July, lots of really high spikes that caused a bounce. And notice when things were mostly all negative, that's when the tops occurred, like it did around the all-time high levels in October and November. Right now, we are, according to this active address versus price divergence chart, in a better spot than usual with mostly positive spikes happening. We'd like to see another huge positive ratio like here, but for now, we're at least in a much better spot than usual according to the last year of data. So keep that in mind as well. Let's go back to the other template. All right, let's take a look at whales now. So we've talked in previous calls about how the 100 to 10,000 coin tier for Bitcoin is generally one we try to look at for those top key stakeholders who are actually active and reacting to price fluctuations on the markets. Right now, it's a continued decline. We've seen a few modest upticks, but mostly chopping from these whales in terms of how much of the supply they're holding. And until this trend breaks, it's going to continue to look a little more dicey than usual, considering the lack of confidence that key stakeholders have. They had their most confidence right before this final charge up to the all-time high in November, where you can see that the stretch from here in mid-May all the way up until late October, we saw an accumulation of about 1.3% of all of Bitcoin supply moving to these top key stakeholders in Bitcoin, and that tends to propel the prices. And on the flip side, when they start to dump, that's when prices tend to move down. But they're not moving down significantly, at least in April, and that's a good sign. Until they really start to either show a big plummet further or a big rise, we can continue to see a lot of chopping. And I think this is another top 5 metric to keep an eye on, especially leading up to the FOMC announcement in May. will whales make a big move here right before the announcement, or are they planning to wait until after? That's going to be a big recipe for what the next big price move looks like for not just Bitcoin, but all of crypto. Exchange flow balance, not a lot happening. Network realized profit loss, same thing. Age consumed, nothing there. We touched on the ratio of transaction volume and profit to loss. And whale transaction count, not much to say other than we are seeing less activity than we were back around all-time high levels, which would make sense, especially with so much of the supply being dumped beginning right around here. That would mean that there are less massive $100,000 plus transactions happening on the network, while these key stakeholders are putting less of a dent on day-to-day transactions. Okay, so that's it for Bitcoin. Let's move right into some altcoin suggestions. I know we put up a poll a couple days ago, and Balresh, you had a few assets that were, spammed multiple times by different people. Maybe we can look at those and then take a few live questions as well, depending on how time looks.
Got you. Let's get started with Quant, QNT.
Okie dokie. All right, Quant is an ERC20, so we should have plenty of data on it. I was looking at something for Quant recently. I'm going to go straight to the bottom. I think it was whale transactions. They were seeing some interesting things. These big spikes back in September are probably dwarfing everything. So let me go to like the last 3 months instead. Okay, that's better. So we're seeing a few big spikes on the whale transaction end over the past 10 or 11 days or so. We saw one here with 12 different whale transactions exceeding $100,000 or more. We saw one here with 12 again. This one right at the local top. So 12 typically is enough to start seeing a bit of a shift in price action, but it really hasn't done much on these past two spikes. I'd say really like these kind of spikes here, especially something like this back on December 11th. So like 25 plus whale transactions would really be a number to watch out for on the quant end to see like a shift in price action, as we saw right at the local top here. This is like essentially 4-hour intervals, and right at this 4-hour interval, there was a huge whale transaction spike, the biggest in the past 6 months. And that completely shifted the prices going from positive, which it was doing very rapidly here in early December, to going back down negative. We saw big bunches that occurred around the local bottom. That's pretty typical as well. And like I said, we've had 12 in a few instances over the past couple of weeks without much price fluctuating happening. We do see a few bunches, interestingly, right around here. Probably the biggest bunch we saw since late February, where that marked a local bottom at the time. So there are some signs that there's some accumulating happening, but let's compare that with the actual supply hold, or I should say supply distribution chart here, with quant being priced at about $98 right now. That would mean that looking around 1,000 to 100,000 coin addresses are usually going to be the top key stakeholders. And it's not really a great looking sign over the past 6 months. They were holding about 48.8% of the supply 6 months ago. They're sitting at 47.3 now. So they've dumped about 1.5% of the quant supply over these past 6 months. We did see an encouraging uptick just in the past couple of days here. On the 27th, we went from 46.5 all the way up to 47.3% in just a single day. So an 0.8% accumulation in just one day is pretty rare and generally a good sign that there's some serious accumulation happening. That said, on the long-term perspective, we still need to see that our current conditions aren't so much lower than they were 6 months ago. And this can mostly be chalked up to just a little bit of noise until the accumulation evidence starts to look a little more clear for a long-term time frame.
Also, Brian, it reminds me a little bit what was in the chart on the 13th of June, I think, where it also price was declining about to break down, and then accumulation increased dramatically. I think it was, no, generally. You see, between December 21 and January.
For quant?
Yes, this spike up in accumulation.
Oh, yeah, right here, exactly. Yeah.
Well, maybe, okay, it looks like spike happened into the fall in price, so it's a bit different. But actually, this is what I was mentioning at the very beginning. You see the price action where at the very, very, very last line of hope and support, if we break lower, well, it's it kind of doesn't look good. Yeah, doesn't look good. We are getting or testing the support at time. Generally, we discuss in our Discord often. That triple bottoms or tops don't exist, even though one time we had an exception. But the rule is we don't have triple bottoms or tops. So there is a very good chance it will go lower from here.
Yeah. I mean, it does appear that this tier of quant holders has a lot of alpha on future price movement. We, just like with Bitcoin, we see a very long-term rise. In this case, it started really, I mean, arguably in May, maybe June, when it really bottomed out. But either way, from here to here, if we just shift click and look at how much accumulation has happened, so they added around 6.3% of coins to their bags that they were currently holding here to here. They added 6.3% more coins, and that equated to 2.9% of the supply. And you can see what it did to the price, going all the way up to a peak of probably a little over 393. If I were to zoom in, we could find out the more precise number. But just about, it looks like 3 to 5 days afterwards, it peaked at about 49% and started to decline. We did see some chopping back and forth. This obviously huge peak here as prices were declining didn't make much of a difference and didn't last very long, obviously. But it's really been on a long-term decline since here, where they have 5.3% less coins in their wallets compared to mid-January, as Maxim pointed out. And prices have slid ever since. And I do believe that if you want to check out Quant's 1,000 to 100,000 coin addresses, it's going to lead the way in terms of where prices go. Just try not to look at it on a day-to-day perspective, more like a week-to-week, right? When you start to see evidence of multiple days where they're clearly climbing, that's going to be a sign that accumulation is really truly beginning, and prices can start to react to those key stakeholders holding more and more of the supply. And that's where those price breakouts tend to happen. All right, a few other things on Quant. Interesting to see that the amount of supply on exchanges is moving up. This is different than a lot of altcoins, probably the majority of altcoins that I've looked at, where supply continues to move off of exchanges, especially for a lot of ERC20s. They're mostly going down, but Quant's supply, especially since the beginning of 2022, we've seen a pretty enormous rise where, we look at January 1st up until now, they were holding 10.4% then and 12.46% now. So about a 2.5% jump in the amount of supply that is on exchanges. That implies there is more risk of a future sell-off, a future large sell-off happening on the Quant network. So long-term wise, not a great sign there. Weighted sentiment, not too much to say. We're not in an extreme polarizing situation one way or another. Very slight bearish bias going on right now. I think we do have MVRV, but it can't be intraday. So let me try the full day MVRV to show you what we have. Okay. So if we mark the negative 15% line, close enough, and sensitive mouse, close enough. Okay, so quant definitely moves in extreme ranges on this 30-day MVRV chart, where it can very often go well above the plus 30% or below the negative 30% thresholds.
Yeah, that's normal for some coins. Yeah, for
exactly.
Some coins.
Yeah, the smaller the market cap is, generally the more extreme you'll see the movements based on what I've seen. And right now, we're in a pretty good historical spot for MVRV. This is one of probably the best bullish indicator for quant, if you believe strongly in MVRV, which we do here at Santiment. We're in a negative range now at about negative 24.5%, 10% below, 9% below the threshold where we typically see an extreme opportunity zone present itself. And we do see that in previous cases, way back in mid to late May here, late January here, and even here in early December, we typically always see an eventual bounce when it goes below here. And right now, this is one of the 4 opportunities in the last year where average trading returns are in an extremely negative range that you may be able to capitalize on for at least the short term. You know, we've looked at a few long-term metrics that don't look so promising, but if you're a swing trader and you're trying to take advantage of some low prices right now, where while there's a lot of blood in the streets, this is the time to do it for quant. Yes, it may go even lower. We could see something super extreme like a negative 40% MVRV, but keep in mind that doesn't happen very often. And if you try to wait for something that's only happened, you know, once in the last year or probably multiple years, if I had to guess, let's change this to 2018.
Brian, just to say, from my opinion, I would stay away for the moment. There is, as I say, quite high chance of breaking lower. I see this similar pattern on many coins. This triple bottoms, this looks risky.
And what's that based on?
Yeah, purely on price action. We saw this bottom where you see this very also strong drop in MVRV. That they kind of built lower lows, not lower lows, second bottom, but now we're going below. This looks risky. This looks like this thing wants to just to scare and liquidate people, or finally push them out of the coins. Just want to go low another 10%.
Yeah, I mean, certainly not investment advice on my end or Maxim's end. According to MVRV, there could be some very short-term relief, but I see what Maxim's saying here, especially from a TA perspective. When you see continued lower lows without much reprieve from that, it can indicate that we are in for some further pain, especially on the mid to long-term perspective. So keep that in mind, but also understand that objectively speaking, we are in a much better spot than usual on the MVRV side of things. So keep that in mind. It's all about really your risk tolerance. Let's see if there's any final things I can touch on here. Curious how the profit versus loss metric is looking. Okay. So it's interesting. We saw some pretty high spikes. This would make sense. Huge high spikes around late March, early April before the big correction continued. And we've actually seen pretty extreme ratios of loss, transactions happening at a loss. Let me zoom in just a little bit. Yeah, so these are actually some of the largest loss ratios that we've seen for quite some time in quant. This is just the current week, so it's still playing out, but the ratio right now indicates that there are over 2 2 transactions happening at a loss compared to every 1 transaction happening in profit. And that's a pretty good sign that there's some capitulation happening. Just to understand, based on what Maxim said, this can still have some further legs to it and go on for a little bit longer. But all things considered, this is going to also be a good bullish metric like MVRV is. So I do like this metric a lot as I'm getting to know how to use it more and more. And I do think that this, 3-week stretch of pretty severe negative transactions happening is a good sign for an eventual bounce. All right, that's all on quant. Why don't we take 2 to 3 more altcoins based on what some of the highest commented ones were on our poll.
Okay, next in line would be 2, but one is Mana, and we covered it in the last weeks a couple of times, I think. So I think we should go with AAVE as the next one.
Okay. Yeah, both ERC20s, but yeah, we covered Mana pretty recently. I think AAVE is the
Max, was it AAVE or Avalanche? You're referencing to what people were discussing in our chat.
Oh no, not yet.
Okay.
I'm still taking this from Twitter, but let's look at Avalanche next, maybe.
Okay, so AAVE was also requested, or just AVAX?
AAVE first, and
Got
then
it.
let's do AVAX next.
All right, we'll do both. So beginning with AAVE, while we're already on this chart, this is what the positive versus negative transaction ratio looks like right now. Pretty neutral, all things considered, not nearly on the extreme levels the way quant was looking. We did see that the biggest spike over the past 6 months happened right before the local top. That is generally exactly what we want to see and makes for some good alpha. The second one was also, second largest was also happening right before the local top happened. It happened right at the conclusion of this week, so that was good alpha. Even this mini one here predicted the tiny local top that we saw back on April 19th. And now we're starting to see some consistent transactions happening at a loss, but they aren't extreme. So this certainly wouldn't look like a big capitulation sign the way it was looking on quant. Not much else to say other than wait for some extreme bars on the negative side. And that's generally going to be a sign that lots of traders are dumping their bags at a loss, and it's something you can capitalize on. Okay, on the circulation end, not too much to update. It looks like it's mostly a continued up and down chop on a day-to-day basis in terms of the amount of unique AAVE circulating on the network. Right now, we're looking at about 114,000 AAVE per day circulating. And compare that to how we were looking 6 months ago, we were seeing about 162,000. So not a promising sign there, probably a semi-bearish divergence based on just a quick eyeball test there. Daily active address, similar story. We saw quite a bit more average daily active addresses on a daily basis back in October, over 1,000. Now we're looking like the average is closer to about 600. So about a 40% drop off over the past 6 months in terms of the amount of unique addresses interacting on the AAVE network. Okay, MVRV, let me update our plus 15 and negative 15% lines. Okay, so just like most altcoins out there, we're seeing that AAVE's current 30-day MVRV is around that opportunity zone. This one actually is slightly below it, sitting at about negative 16.7%, with negative 15% being the threshold we look for those extreme zones where a buy is justified. We saw that it worked out very well on the short term back in late November, on the longer term back in mid-December, and in the longer term in late January. So there is some justification to add on to your position in AAVE right now, or purchase AAVE outright if you don't own any. but know that there could be a little bit further pain, seeing that we got to like negative 40% at one point for this altcoin. All things considered, much less risk than usual to enter into a position based on the 30-day MVRV time frame. Weighted sentiment, interesting. We're seeing a huge positive spike. It's a short sample size right now, but over the last couple of days, it does look like there is some extreme positive commentary and an increase in social volume happening for this asset. I wouldn't be sure as to why. If one of you do know, feel free to drop it in the replies and Balresh or Maxim can read it. But it's interesting to see that there's some euphoria happening right now because there really hasn't been any major decoupling that I know of for AAVE, at least what I've seen on the charts. So it could be some fundamental reason, or it could just be, you know, a pump and dump group that is talking about AAVE a lot more and trying to get the price action to pick up. Supply and exchange is fairly neutral, up a little bit over the past 6 months. There is currently a very, very small amount of AAVE on exchanges, though, as it's a commonly used DeFi asset. So a lot of the usage for it is being done away from exchanges. That only makes sense. But generally a pretty good sign as long as the supply and exchanges is below 1% and even below 0.5%, which is pretty rare for most assets. All right, let's take a look at whales. The price of AAVE is sitting just a bit over 150. So we can look at about 1,000 to 100,000, just like we looked at for quant. And it's looking a little better here than it did for quant. We're seeing over the past 6 months, a rise has occurred. They were at about 21% held 6 months ago. They hold 22.5% now. So they have accumulated 1.5% of the supply over the past 6 months, in spite of the crazy price choppiness that's been happening. I see this as a good sign. Just over the past 2 weeks or so, they've accumulated about 0.5% of the supply, despite kind of a downward price movement action that we've seen. And I think that would be at least a short-term bullish indicator. I do see that, you know, during this big dip here, there was mostly accumulation happening. So the key stakeholders, those with $100,000, $150,000, all the way up to about $15 million in AAVE held, they aren't too worried about these big dips, and they seem to accumulate into just about every one of them. So I think this is a promising sign, and it does look a lot better than Quant's whales and how they've been behaving. Again, I want to ask you, Maxim, what you take out of the whale behavior here for AAVE.
This one is good, yeah. This one is good.
Yeah.
They probably in anticipation of version 3 of AAVE, looks like accumulated quite something. It's just unlucky, or kind of unlucky that the whole market is still pressed down by all this market cycles. And you see there was an attempt quite nicely to pump. So yeah, generally always good. Always good. There is a clear sign of strong behavior and continuing. So if even prices going down, they keep increasing. That's good.
Yeah, so on the whale side, guys, I think it looks pretty good for AAVE. I'm curious if there's been some significant whale transactions happening. It looks like we did see one spike. Let's zoom into the last couple of weeks here. So this is what I'm talking about. Right here, we saw over a okay, let me zoom in a little bit. This is a bit too granular. Yeah. So right about here, right after the local bottom, we started to see some serious accumulation just as prices were rising on April 26th. And they continued rising up until yesterday when we did see that big fall off and a lot of altcoins corrected. this could have been nothing more than a market-wide correction here, but I like to see that this occurred pretty much at the very end of a bottom. This was the largest spike I saw outside of one in March. So this huge one here, I'm very curious what happened. Over the span of 4 hours here on March 29th, we saw 590 whale transactions. That is massive. And that again occurred as prices were rising. So most of these whale transaction spikes occur on the rise, and prices tend to continue after these whale transaction spikes occur. So keep looking out for these, and I think you might have some good alpha here for AAVE. Obviously, this one was huge, and we may not see another 500 plus transaction count over 4 hours for a long time. But if you do see something like this and prices are rising into it, that's a good sign that the price will continue to climb based on historical evidence. Okay, so that's good on AAVE. Let's take two more, Balresh, and then we will call it a call.
Okay, let's do Avalanche, AVAX, and
Perfect.
AXS, Axie Infinity.
Got it. A lot of A's. Okay, so Avalanche is not an ERC20, so keep in mind we do have limited data on it. Mostly what we can look at is development activity and social data. And what we see here in the past year is a definite rise in the amount of activity by the coders who help innovate and improve Avalanche. And we saw about what looks to be about 14.5 development submissions per day on their GitHub a year ago versus where we are now at about a little over 22. So we're moving in the right direction. I'm curious just how far back we can go and see the development action here. Let's just go from late 2019 until now. And yeah, we're seeing a clear upward movement, you know, when obviously the public trading didn't really start until mid 2020. So the asset has only been publicly traded for a little under 2 years now. But during this time, we saw some huge spikes in development early on in its public trading venture. And it kind of dropped off here as 2021 saw some major price declines. And then as prices exploded, you can see that development activity gradually picked up to back to where it was toward the beginning of its public trading journey. So I think development activity looks pretty good, all things considered. I'd like to see that like where we are now exceeds the development activity from when it first started trading, but it definitely looks like it has a dedicated team that is actively working on improving Avalanche over time. And then as far as social volume and dominance is concerned, let's zoom in. We'll do the last 6 months here. Okay, so Avalanche really got on the map in late November. This was about 2 weeks after Bitcoin and Ethereum hit their all-time highs, and then Avalanche went on a huge run itself, going to an all-time high of around a little over 135. The social dominance got as high as 2% at the time, which is massive considering its market cap. I believe it's outside the top 50. Let me check. Oh, no, I'm sorry, my mistake. So this is actually the 12th ranked market cap asset. I didn't realize Avalanche was so huge. But regardless, the social volume and dominance is starting to, it isn't really doing much, actually. It looks like it's staying pretty dormant, and the average dominance on it is just about 0.5% right now. Social volume has stayed pretty low. This can be considered a good thing. It means that Avalanche is a bit under the radar. So many altcoins have followed this same pattern throughout April that this is nothing new. And I would fathom that another spike would probably come while volume and dominance stays low. Yeah, I think we have to just wait and see and look for an uptick. in dominance. Generally, if there's some big price action and suddenly a big spike in dominance happens, that's a sign that the crowd is really starting to pay attention to that price movement, and a turnaround in price is likely to happen, sort of like what we saw here and a little bit here.
Because it's a big enough social volume, can you check a weighted sentiment?
Yep.
And also increase or like Twitter follows 24 hours.
Yeah, I'll do that as well. So beginning with weighted sentiment, it looks like we had one big euphoric spike happen in mid to late March here. And since that time, it's sort of fallen back to earth and has stayed pretty neutral ever since. We had this long stretch of negativity, interesting. But overall, yeah, it's a better sign than usual, Maxim.
And then Twitter 24 hours increase.
All right. So in terms of Twitter followers, it's staying pretty low, just like dominance. Not a lot of attention being paid to it right now.
Okay. Yeah. We're generally we're ripe, or looks like we're ripe. It just somehow I cannot get rid of this feeling we need to dive below all the support lines one more last time.
Yeah.
Somehow it keeps following me, this idea. The moment I saw so many coins sitting in a similar position, temptation is too good to go lower. Okay, but
so in this case,
support
line,
it's
support line would look around $56, $58 like it was in January. Yeah. So if it fell below that, that would be the capitulation sign.
Yeah, we'll likely see a lot of negativity.
Yep. All right, so now we will look at, it was Axis, right? AXS?
Yes, that's the one.
Perfect. So this is an ERC20. We'll have a few more metrics on it than we did for Avalanche. Circulation, huge dwarf on the axis because of that one spike. Interesting that we're seeing a big circulation spike today of a little over 3 million. I'm curious what this is being caused by, but it does look like there is a definitive uptick in the amount of unique Axie Infinity moving from wallet to wallet, and it is way above where it normally is, about 10 times higher than a typical day for circulation. So this might be some interesting alpha here. We'll take a look at some other metrics to see whether this correlates with something that might be a potential bounce or a further downswing. Daily active addresses. We'll move back to 6 months. It's been dropping quite hard, actually. So Axie Infinity 6 months ago, we were looking at about 2,100 or so daily active addresses per day versus 500 now. So we're a little under a quarter of the amount of unique addresses interacting on the Axie Infinity network compared to 6 months ago. MVRV is seeing some crazy swings. This can't be right, though. I think we're seeing some weirdness going on with the MVRV, guys. So we'll talk to our support team about this, but we're obviously not seeing average trading returns at negative 3,800%. So we will skip that. Apologies that we have incorrect data there. Let me switch this back to weighted sentiment. All right, so on the weighted sentiment side, it's been mostly mildly continued bearish sentiment coming from the crowd. We had some huge positive spikes here that actually marked a local bottom, interestingly, but it's returned kind of to the same stretch we saw from January all the way up to late February, where it's almost all negative. Until that changes, it's going to be an indication that Axie Infinity is a little under the radar, not getting as much attention as it should. This is typically, these long stretches of mild bearishness usually happens because it's just not getting a lot of attention more than anything. If we saw an extreme drop, that would be a sign of capitulation, but this doesn't look quite extreme enough at around a negative 0.6 standard deviation. Supply and exchanges does look like it's moving down in the right direction. Just like AAVE, there's very little supply on exchanges. I don't know as much about the usage for AXI, but considering it continues to move off, especially after 6 months ago, it was near 2%, and now it's at about a little over 0.5% of the supply and exchanges. That's a pretty good sign that a further massive sell-off is much less likely to occur. As far as whale behavior, so we're sitting $35 per coin. I'm going to say that most whales would probably occur anywhere between 1,000 all the way up to 1 million. Maybe 1 million is too high. Let's see how things look in terms of alpha. Okay, not much different. I'll actually stick with the 1,000 to 100,000 tier like we looked at for the other two altcoins, because it does look like there's some legitimate alpha here. It's been mostly pretty flat during the first. Let me zoom out just a little bit more. Interesting. Okay, so they showed some massive accumulation happening from this point last year all the way up until around August. And during that time, prices absolutely soared. You know, we were actually under $4 around June of last year and got up to a peak of a little over $160. So huge price upswing there, followed by, after this dump off here, kind of a local top, one final push above. This was very similar to what happened to Bitcoin, actually, where the whales, in their case, they started dumping in October. Here we see it happen in September. There was an all-time high that occurred shortly after, and then one final push, but the whales weren't really reacting much to it and had already taken their profits earlier here. And then the huge steep drop off. And we are starting to see, beginning around the turn of the year, we're starting to see some accumulation happening again, especially just in the past few days, a pretty sizable uptick here, which is probably the largest uptick we've seen over a 2-day span since going back to August of last year. So this does appear to be a pretty good sign where the key stakeholders are beginning to add to their bags once again, now that prices are suppressed back down to below $35. Any additional points on this you'd like to add, Maxim?
Yeah, looks good.
Yeah, one of the more supply distribution charts I've seen.
There is obviously strong belief. Whether it's good or bad, but
yeah.
But this group seems to be also smart enough to exit before that. Yeah, not bad.
Yeah. All things considered, I think it's good that we've seen a pretty gradual accumulation really beginning right around mid-December, even as prices are going down. As Maxim said, there is strong belief by those key stakeholders that these prices can move up. So definitely a good sign on this chart. And any final points I can make? Let me just check. Nah, the ratio doesn't really show much. Whale transaction count. Let's look at just the last 5 or so weeks or so. Interesting. So we have seen a few big spikes that occurred right around late March, early April. In most of those cases, they marked local tops and prices declined afterwards. But we do see, as of yesterday, we had the largest whale transaction spike since the beginning of the month. It's not quite as sizable as these ones, but 44 transactions occurred in this 4-hour stretch of $100,000 or more, and it's occurring as prices are plummeting. So this likely correlates with that uptick in supply distribution moving up these past couple days, and likely appears to be an accumulation spike, a legitimate accumulation indication from this chart, showing that some key stakeholders are beginning to buy back into Axie Infinity. It certainly isn't precisely going to mark a local bottom. Interesting that a browser tab restriction came up. But regardless, we're done anyways. I think this is a good spot to conclude, guys. I appreciate all of the altcoin recommendations. We looked at some really good ones today, and myself and Maxim definitely learned a few things. Thank you for continuing to tune in and supporting Santiment as always. We continue to release these every Friday at 2 p.m. UTC. Don't forget that you have ref links that you can use by going to your avatar at the top right and clicking the generate ref link button. And until next time, guys, I wish you all a very safe and warm weekend. Continue to be patient with your trades. Do not get frustrated and begin to make emotional decisions. That is investment advice that I can safely tell you all based on many community members I've seen and the successes and lack of successes they've had. But as far as everything we've talked about in terms of metrics and how bullish or bearish things look, remember that we are not here to give investment advice directly to tell you where prices are going to go next. We're simply playing the odds and making educated guesses based on objective data that we've looked at in the past. So on behalf of Maxim, I want to thank you all and looking forward to talking next week.
Yeah, talk to you next week.
Adios, guys.